Hello and welcome back to another episode of Supercharge Your Finances, the education series. My name is Easton Price, a financial planner with Prosperity Wealth Planning. Today we are going to be simplifying property and casualty insurance. We're going to be talking about the basics of property and casualty, what you need to know, and then some common pitfalls that you can avoid. Now, it's important to note before we start that we are not insurance professionals at Prosperity Wealth Planning. We are, however, holistic financial planners that specialize in comprehensive financial planning. So we do like to take a look at your property and casualty insurance side by side with your financial plan. And with that, let's jump right in. So here's the agenda for today. What we'll be covering are, again, the basics of property and casualty insurance. The way I want you to think about property and casualty insurance is an asset protection tool. That is really what it's designed for, and you'll find out more about that here in just a minute. We'll cover homeowners insurance, we'll cover autos insurance, we'll talk a little bit about umbrella, and we'll show you a tool that we use to help our clients better understand their property and casualty coverage. So with that, homeowners insurance, and here's a few things that you really need to know. Number one, your dwelling. This is the biggest piece of coverage that goes on your homeowner's policy, and it's arguably one of the most important. A lot of people will base their dwelling coverage on the purchase price or the tax assessed value of their home, as opposed to what it would actually cost to rebuild your home. So that's first and foremost something to check in on with your dwelling coverage is what would the actual cost be to rebuild your home as it stands today, and not just what is your tax assessed value or what you purchased your home for. The next is extended replacement versus guaranteed replacement cost. Extended cost is something we see on a lot of our clients' policies. And what this is saying is that above and beyond your dwelling coverage, your policy will have a certain percentage that it allows to extend beyond that underlying dwelling limit. Once it hits that percentage beyond your dwelling limit, that's it. That's the cap, the max benefit that will be paid out to you to rebuild your home. Now, guaranteed replacement cost, this is different. Whatever the cost to rebuild your home as it stands today, the guaranteed replacement cost guarantees that amount gets paid out to you to rebuild your home as it stands today. Personal property is another big one on the homeowner's insurance. This covers things like furniture, appliances, jewelry, art collections, and other major collectibles. And if you don't have a specialized endorsement or rider set aside specifically for personal property, could very much be worth looking into. And finally, loss of use coverage. This is the coverage that your insurance provider will pay out in the event of a major or total loss of your home. Usually it's a percentage of your dwelling coverage, and the question you need to ask yourself is that percentage enough to last me a year or more? The idea here is that you would be renting elsewhere to live while your home is being rebuilt or repaired. And so you need to make sure that you have enough coverage to rent in the area that you would want to live in the event of a total or major loss of your home. And that takes us through the end of the homeowner section, so let's jump right ahead to auto coverage. Just a few things to note here with auto coverage, and the first one is the underlying liability limits. Now, I gave the example of California. The legal limits for California are $15,000, $30,000, and $5,000. Now, these liability limits cover things like bodily injury per person, bodily injury per occurrence, and property damage. In California, you can see these numbers are pretty low. A lot of expensive cars on the road. There's a lot of expensive property around. And so in the event of an accident, you're going to want to make sure that you have well beyond what the California legal liability limits are. Regardless of where you live, making sure that you have proper uninsured and underinsured motorist coverage is going to be essential. The final point on auto coverage is deductibles. We see a lot of clients that have lower deductibles when in reality they have the means to pay for higher deductibles, which in turn would reduce their overall policy premium. And that takes us through the end of auto coverage. The final point here that we want to talk about is umbrella insurance. Now, umbrella insurance covers anything above and beyond your underlying home and auto liabilities. So the third bullet point there is the minimum underlying liability limits are required, meaning you have to have adequate coverage limits on your home and auto policies to even qualify for an umbrella policy. This type of coverage is extremely cost effective, allowing you to get millions of dollars of coverage for a few hundred to a few $1,000s of premiums. So with that, let's jump into our financial planning software that we use to analyze our clients' property and casualty insurance. After we've compiled our clients' home, auto, and umbrella policies, we run this report that we then review with them to highlight any potential areas of improvement. So what this does is it gives us an overview of what's going on under the hood in any one of these policies. So we can see the dwelling limit, the extended replacement cost, the dwelling deductible, other structures, loss of use limit, personal property, personal liability, and medical payments to others. Our software then highlights what looks good, what's moderate risk, and what needs attention immediately. I'm not going to read all of these, but just to give you an illustrative overview, it highlights all the things that would be listed or should be listed in your policy that it's not seeing in red first, then in yellow, and then anything that looks good in green last. Now the auto is listed in the same format as the homeowner's insurance, where it lists all the policy details first, the coverage limits, and then below lists out things that need attention or are considered moderate risk. Now one thing to note here is we can see just by looking at this, the deductibles are $500. And then the comprehensive is listed as yes, but then nothing is given. These would be things that our software would then flag, along with things like the bodily injury or the property damage, because those limits are fairly low. Scrolling down, you can see all the things that need attention listed first, followed by the items that listed as moderate risk, and closing with those items that look good. In this sample client, we do have a landlord or a rental property that's listed here. It's the same format as before. And then lastly, here is the umbrella insurance. So umbrella insurance, same format, all the details listed first. The underlying liability limits are also listed here on the policy. And then again, followed by any items that need attention immediately, followed by moderate risk, and lastly, things that look good. So this is the report that we use to review with clients. And after we've done that, we will also produce what we call an agent letter. Now this agent letter is a great tool to provide directly to your insurance agent. The document outlines a list of questions that correspond with all of the sections you saw on the previous page. So lists out home first, auto, landlord, and umbrella. And these questions directly correlate with all of the items that need immediate attention and are listed as moderate risk. So that's this insurance letter. And with that, these are the types of documents that we're producing to give to our clients to ensure that they understand, have eyes wide open on their policy coverages, and then have all the tools that they need to go back to their insurance provider and make any adjustments necessary. And finally, we'll close with some common pitfalls here. The number one thing that we see is people are shopping purely on price. They're not really diving into the details of what the underlying limits look like or the underlying endorsements or riders. They're shopping purely price, and they're shopping the lowest price. And while we're all trying to save a buck, we want to ensure that our property and casualty insurance provides true asset protection. The second item here is failing to revisit coverage after a major life event. Things like an inheritance, a marriage, a divorce. You get a new vehicle, or you have a new driver on your plan. All of these life transitions or major life events would warrant a revisit to your property and casualty insurance. And finally, for those people who do have a trust as part of their estate documents, you want to make sure that that is listed as an additional insured on your property and casualty insurance policies. Thank you very much for being here today. We hope you learned something on property and casualty insurance. And if you have any questions, please don't hesitate to reach out. Thanks.
Past performance is not indicative of future results. Investments involve risk and, unless otherwise stated, are not guaranteed. Prosperity Wealth Planning, LLC, is a registered investment advisor located in Irvine, California. Prosperity Wealth Planning may only transact business in those states in which it is registered or qualifies for an exemption or exclusion from registration requirements. The information in this video should not be construed as a substitute for personalized individual advice from Prosperity Wealth Planning. Information is for educational purposes only and is not intended to make an offer or solicitation for the sale or purchase of any specific securities, instruments, or investment strategies. Prosperity Wealth Planning is not a CPA firm or law firm and does not provide specific tax advice, legal advice, or estate planning services. You should consult with a qualified tax professional or attorney for tax or legal advice before implementing any strategy discussed herein. Case studies presented are purely hypothetical examples only and do not represent actual clients or results. These studies are provided for educational and illustrative purposes only. Similar or even positive results cannot be guaranteed. Each client has their own unique set of circumstances, so products and strategies may not be suitable for all people. Be sure to first consult with a qualified financial advisor and/or a tax professional before implementing any strategy discussed herein. No portion of these case studies is to be interpreted as a testimonial or endorsement of the firm's investment advisory services. The opinions expressed by our firm or its supervised personnel herein are subject to change without notice. The opinions referenced are as the date of publication and are subject to change due to changes in the market or economic conditions and may not necessarily come to pass.